Hello guys. Major news just broke: Donald Trump has secured another election victory, and it's already creating noticeable ripples in the financial world, particularly impacting the NIO stock in a rather unfavorable way. In contrast, Tesla seems to be experiencing a positive boost from the election outcome, which is not unexpected given Tesla's home ground advantage and the political implications tied to this victory. We'll dive deeper into this effect on the stocks in a bit. But first, let's shift focus to some encouraging developments for NIO. To start with, NIO is taking a stand against D-Car in a bid to defend its position and reputation in the electric vehicle EV market. Recently, D-Car conducted a comprehensive set of crash tests in China, scrutinizing a range of vehicles, and gave NIO ET5 a less than stellar review. They criticized the vehicle, citing issues with the pillar stability under impact, and mentioned concerns about the door handles not deploying as expected during testing. In response, NIO is making a determined effort to address these concerns. The company has reasserted the ET5's impressive safety track record, emphasizing its 5-star rating from the Euro NCAP, which is a notable endorsement of safety standards. Through an extensive post, NIO has outlined the various safety features and functional strengths of the ET5, aiming to ensure that customers and potential buyers are fully aware of the vehicle's safety capabilities. This level of transparency and focus on safety is reassuring, especially for NIO customers, as it directly addresses their main concerns. For a model like the ET5, along with the ET5T, ES6, and EC6, which are central to NIO lineup, maintaining consumer confidence in their safety is crucial. Meanwhile, on the international front, NIO has launched a new financing offer in Europe, specifically designed to make its cars more accessible to a wider audience. Although the interest rate isn't completely zero, it's an exceptionally low rate of just 0.99%, which is nearly as good as it gets. For instance, potential buyers interested in the ET7 model can now finance it with monthly payments of around €479, with an effective 0.99% interest rate, following an initial down payment of €16,850 and a final payment of €23,590. The ET5, in turn, is available for a monthly payment of €261 with similar financing conditions, including the same 0.99% interest rate. By introducing this low-interest financing option, NIO aims to underscore the affordability of its EVs for European consumers. Currently, this attractive offer is available in the Netherlands, where NIO is working to enhance its market presence. It's clear that the company is intent on capturing consumer interest by making these vehicles accessible to a broader demographic. So, what implications does Trump victory have for NIO future? While NIO doesn't currently sell vehicles in the United States, it's listed on the U.S. stock market, which brings it within reach of U.S. regulatory impact. Trump has a long history of implementing stringent policies towards China, frequently emphasizing the need for tariffs on imported goods, especially those from China. Should these policies be revived or even strengthened, the prospects for NIO selling cars in the U.S. could diminish even further. While NIO is actively expanding in Europe, the Middle East, and other international markets, the idea of entering the U.S. market appears increasingly unlikely under a Trump administration. That said, Trump's stance isn't entirely rigid. In previous years, he met with prominent Chinese entrepreneurs like Jack Ma and even praised their contributions, acknowledging the importance of mutual business interests. A similar scenario could unfold with NIO CEO William Lai, if he were to propose building a factory in a U.S. state like Michigan. For instance, such a move, coupled with the promise of creating American jobs, might even find favor with Trump administration, creating an opportunity for NIO to establish a foothold in the U.S. despite the odds. However, the cost of expanding in the U.S. would be substantial for NIO. Unlike many automakers, NIO expansion would require not only a manufacturing facility, but also a network of battery swap stations, a critical component of its service model. Additionally, NIO would need to set up a full-service infrastructure, including NIO houses and maintenance teams to support customers across the country. Given the geographical scope and scale of the U.S., such an expansion would be both costly and logistically complex. Another factor to consider is the potential impact of tariffs on NIO newer sub-brands like Firefly and Onvo. Expanding these into U.S. markets would require even more groundwork, including establishing brand-specific retail locations and service infrastructure. With all these considerations, focusing on Europe and the UAE seems like a more strategic and feasible path for NIO at this time. For U.S. residents interested in purchasing a NIO vehicle, it seems that their best option for now is to relocate to a region where NIO operates, such as China, the UAE, or Europe. But beyond the logistical challenges, there's also a question of regulatory risk. It's possible that Trump administration might implement policies targeting Chinese companies listed in the U.S., which could impact NIO along with other Chinese stocks. While this is speculative, the potential for increased regulatory scrutiny is a factor that could weigh on investor sentiment, and we've already seen a degree of uncertainty reflected in NIO's share price. Nevertheless, if William Lai decided to enter the U.S. market, he could potentially negotiate favorable terms by emphasizing job creation and local investment, which might appeal to Trump's economic agenda. Trump has shown a preference for policies that support American jobs, so this could work in NIO's favor under the right circumstances. Currently, however, it's more likely that NIO will continue to focus on markets where expansion is less costly and regulatory hurdles are lower. From a technical perspective, NIO stock is hovering around critical support levels, particularly around the $5 mark. Should the stock fall below this level without recovering, it may indicate a downturn. However, if it holds, we could see some resilience in the price. This level is significant to watch in the short term as it may signal the next trend direction for NIO's share price. Financially, NIO is in an interesting position. While the company isn't technically profitable yet, its CEO recently indicated that they are making progress in terms of revenue from vehicle sales. This increase in earnings, driven by higher sales margins and a growing customer base, is encouraging for the company's long-term outlook. Although research and development expenses continue to impact NIO profitability, the overall revenue trajectory is promising as they work towards achieving sustained profitability. In summary, despite the uncertainties linked to Trump election win and the potential risks for Chinese stocks, NIO future still holds promise. The company growth strategy, combined with its continued efforts to expand internationally, is setting a solid foundation for the long term. So, while the near term might bring some volatility, the long-term outlook remains positive for NIO. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next